Welcome. I'm Ernie Goss, Professor of Economics and McAllister Chair at Creighton University in beautiful downtown Omaha, Nebraska. Here we are on the first business day of the month of July, and I'm reporting on business conditions as recorded for the month of June, according to businesses in 9 states stretching from North Dakota and Minnesota, right down the middle of the country to Arkansas and Oklahoma in the south. This is an index. All the indices that I'm going to talk about range from 0 to 100. 50 is growth neutral, so above 50 is normally thought of as good. Well, what was the overall index? That's what sometimes called a PMI, Purchasing Management Index. What was it for the month? Well, it was, for the 5th straight month, it was above growth neutral, but by golly, it was not much above growth neutral. The overall index declined to 50.1 from May's little even tepid 52.1. So it was still above growth neutral, but not by much. Here I'm going to show you the chart of the U.S. compared to the MidAmerican over the last, since January of 2015 to the latest number of June of 2016. And you see the blue, in blue, Creighton, beautiful Creighton blue. The index is just moving along sideways, I'll call it. That's not good. That's manufacturing primarily, and you see it's declined for the month. The overall U.S. number there in red will come out later on this month. This morning, later on this morning, not this month, later on this morning. I expect it to be likewise weak, and again, the economy, these leading economic indicators are not pointing to solid growth. The job index for the month of June was down from 51.4 in May to 46.1 in June. Now that's not good. That's indicating job losses in manufacturing for the month, and this is translating into overall job growth of about half of what we saw this time last year. So this economy is not moving in a brisk manner forward. We asked about hiring for the second half of 2016. 1 in 6 firms expect layoffs. Not good. 1 in 4 firms, on the other hand, expect additions, anticipate hiring, so that's good. The remaining 58% expect no change. So all in all, that's probably, I'd argue, that's pretty good. Now the prices paid index, as I said, inflation, as I'm going to say, inflation is a real issue going forward. The prices paid index, which is at the wholesale level, it grew to its highest level since May of 2015. June 66.7, up from 62.4 in May. That's a bit strong, and I'm concerned about inflationary pressures. If it matched in the future, I expect the Fed to raise rates. I do expect another rate hike. Now, it's going to come later on in 2016. Now, what to watch for in the weeks and months ahead? Keep an eye on that June jobs report. That'll come out on July the 8th. That's going to be that's a week from today, of course. We need to see a number above 150,000. Now, if the number comes in below, say, 100,000, raising some issues there. And we could, again, we're going to see inflationary pressures build at the same time the economy is slowing. That's going to bring in higher rates. That's not good. That's a bad recipe there. Keep an eye on the CPI for June. That comes out July the 15th. That number, the core, which is the CPI, Consumer Price Index, which excludes food and energy, that number has been ticking up to above 2 now, to 2.5, now moving to 2.5, maybe even to 3 later on this year. That's a real problem. That would push the Fed to raise rates, perhaps even more than once, which is what I expect for the rest of the year, maybe 2 times, maybe even 3 times if we see a lot of inflationary pressures. Now, what are the risks? Strong U.S. dollar, because Brexit happened, as we all know, and now that Great Britain will be exiting the EU with Article 50 as soon as that's a done deal. Article 50, then they've 2 years of moving out, and of course that would tend to strengthen the value of the dollar. That tends to really slow the economy down because it makes our goods less competitively priced abroad. So that's the real concern. Puerto Rico could, in fact, default later on today. Now that would be a remarkable event, not a remarkably good event, a remarkably bad event. And I'm concerned about that. That would tend to raise the value of the dollar, despite what's gone on in Congress. The arrangements there made to schedule payments is now faltering, and that would be a real problem, raising the value of the dollar again. Puerto Rican debt default. U.S. inflation rate is a real risk factor right now. If it moves upward, then you could see, of course, the higher interest rates, and that would be on the short end as long-term interest rates come down. So, and also another risk factor is the 10-year yield coming down even more, just reflecting a lot of risk. So, that's it. That's our report for the month of June. It was not a great report, but we've had worse reports, so it was a okay report. Keep an eye on the U.S. numbers that come out later on this morning. Until we meet again back here, this is that's on August the 1st. Where we'll provide our results for the month of July. Until we meet again on that date, may your economic cup runneth over.